The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, let's get the decenters out of the way. I've had a request to grow up and stop using things out of the movies to start the show. My advice is find a different show. This is one of the things that I really like a lot is this movie, Trading Places, and the music from Mozart I love. I'm sorry that the person doesn't like it, but, you know, I'm too old to change, boys and girls. And it is a fun movie. And if you haven't seen it, you should. And it's a lot about trading and certainly about the psychology of trading. Anyway, what we'll see here is the DAX. Pay attention to this one, folks. This is Mother God and Country stuff this morning. If we look at this DAX, this goes all the way back to January. As you can see, we've been in an uptrend. We've had higher bottoms, higher tops. Much different than what we've been happening since March in our market. You see, there's been we've been moving down. This has been moving up, but we've reached some really strong resistance levels here at 12,361 today. If this is correct, it should start down. We'll double check this tomorrow, of course, but this is a certainly completed pattern. It has everything you could possibly ask. To put a trade on, your risk would be, somewhere around 12,420 or something like that, risking about 60 pips. So it's pretty good. Yeah, Jim, I know. I saw it was on again Saturday night on. It was one of the movie channels that I when we go to Philadelphia, I always go to the places where the to Rittenback Square and Washington Park, where all that stuff happened, where he took his little skateboard and everything. That was such a great movie. In 1983, I was at Water Tower Place in Chicago. I was trading on the floor. I'd finished trading and didn't know much about the movies, but I always liked Dan Aykroyd. And so I went, I sat through it 3 times. That's how much I liked it. And, since that time, I've seen it a lot. Okay, let's move on to the markets. Oh, by the way, Adrian Togaray, one of the trading psychologists that has taken up the slack from Mark Douglas, is having a free webinar tomorrow afternoon. If you want to go to it, she's going to answer questions that traders always ask. It's a really good thing, and it's free. So if you would, be so kind to watch it if you like. If not, I think they have it archived. Just go to Trading on Target, and you should be able to get onto it, but it's free. I hope it doesn't interfere with anything we have here at TFNN. I don't think it does because it comes on early. It comes on right after the market closes at 4:30. But it's certainly worth it because you'll get some ideas of these questions that, traders always ask. Now, one of the things that I used to do with Mark Douglas is, I don't know if a lot of you folks know this or not, but he did a lot of work for Merrill Lynch in the early years when he was writing The Disciplined Trader. And he had reams and reams of papers of questions and answers of why traders lost so much money. And Merrill Lynch kept really good records on this. And what the records showed is that people that were trading, beginning traders, they have about an 85% chance of losing and just dropping out. That usually takes somewhere between 1 and 2 years. The reasoning for their losses were they put their stops too close. That was one thing. The second thing was they traded too often, like 10, 20 times a day. And third, they wouldn't use any money management at all, and then that 1 or 2 big losses would would tear them up and hurt them pretty badly. But those were the three reasons that were there. They stay there forever. It's all part of the psychology of the market that we're looking at. So none of that stuff has changed at all. It gets based down to responsibility. You're the one that takes responsibility for the trade, not anybody else, but just you. And if you remember that, I think you'll be far better off. You can't blame it on anyone. We give you some ideas, just like this potential, sale that we have in the German DAX. I mean, and I'm not trading that today. I'm just watching it. I'm looking at some other things, but that's what we're looking at today. I bring this up because this comes from one of our favorite folks, and we get that through another one of our favorite folks. And so I just wanted to send this chart to you because he does a great job at looking at this German DAX. But boy, if you want to study harmony and patterns, boy, this is it. You've got two 1.618 expansions. You've got two ABCD patterns. You've got a butterfly pattern. Oh, holy cow. This is what you look for. Whether that's going to be right or not, remains to be seen. Now, I wanted to move over to the euro because we're very, very close here in the euro this morning. This is one of the things that we were talking about just the other day. And you're absolutely right, Mark. Anyway, you'll see here that we've climbed a wall here over the past month in March. We've made two beautiful ABCD patterns, culminating with a 3-drive pattern up at the 1.618. Again, you hear that same number, 1.618. And then, if you noticed yesterday, last night. It was actually last night, late. We hit the exact 78% retracement of the low from mid-March, and then we also hit the 61% retracement from the beginning of March. That came in at the 106.50 level. We hit that level spot on. We haven't rallied very much. We've only rallied about 15 pips off of that, but the fact that it hit it the first time does mean something. Now, if we start getting below 106.30, then this is going to be a failed pattern and we're heading down. Because if you remember, one of the things that we were looking at last week, yes, the China markets are closed. I'm not sure why they're closed today. They have more holidays over there than we have news medias. Hold on just a second. Let's put up this euro chart so you can see the euro has the potential of making an ABCD pattern on a longer term time frame. It took 4 months, January, February, March, and April. Not April, to 3 months. So it took 3 months to complete that ABCD pattern right at the 61% retracement of that previous high, way back in October. That tells us that we're looking at something. Let's try that again. It made a 382 of that high back in October and a 61% retracement of the high from November. And now we've come down really hard for 5 days. We're basically unchanged today, but as you can see from this chart, we are flat out right on major support. If that support fails, we're going to be going lower. So below 106.30, I would think this would be a failed pattern, and we're probably getting ready to go a lot lower. That's what it would look like from my perspective, because it's just lined up so perfectly. You've got just like in the DAX, it might not work, but you got all the things lined up that you really need, and then you'll be able to see it pretty easily. You're right. Someone in the den said the mirror is the answer. Yeah, the mirror is your trading. Look in the mirror. There's where your answer is. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted a chart for the, I hope I've posted it in here. Let's double check it. Yeah, there we go. This is a chart from the book by Robert Prechter that he just came out with. It's the Socioeconomics of the markets and finance, I believe is what they call it. It's a pretty intense book, but it was really interesting because what this really shows you is the fact that the news really doesn't run what the market's doing. It's actual cycles. Take a look at here at what happened on 9/11. We were coming down really hard, as you can see here. From the chart, and we went down, after the market reopened. If you remember, we were closed for about 6 or 7 days, as I recall, and then we reopened in mid-September. Oh, I forget what day it was. It must have been the 19th or 20th, somewhere around in there. I know we were closed for about 5 days, which was only the second time in the history of our country where we were closed. But notice that after we made that bottom, in September, we rallied for 6 months really strongly, all the way up to the 78% retracement level from the yearly high. And then we went down and we made our third drive to a bottom that occurred in 2002, and that's what really that's when the really bull market started. So this book really shows you all the different things that have happened that really have nothing to do with the market. He went through them one after another, and it was really interesting just to see the pictures of it, of how these patterns unveiled. I'm not making a recommendation on the book. I just know it's got a lot of great charts and stuff in it. But if you do like reading and financial stuff, I guess I have to make a recommendation on it because it's really good. It's not a technical book, folks. It's a psychological book, but it shows the patterns that occurred in some of these markets. This happened to be one of the ones that I was most familiar with. because I was trading well, I'm still trading active, but during that time that the planes hit that day, I was on the phone with Arch Crawford when the second plane hit, and shortly thereafter, Arch called and told me that the Pentagon had been bombed, and that was 15 minutes before CNBC or any of the news people had it. It was really, oh, that was such a bad time. Oh, anyway, let's move on to the next one. Let's get back to the gold market here, folks. We've got a real interesting situation in the gold market. I'm going to start out with the gold bug index, and the reason why I'm hold on just one second here, and I'll do this for you at the break. What I'll do is I've sent this out, this post on for Adrian, but it's just go to www.tradingontarget.com, and you'll see the website, and then you can just sign up and do it there. It'll be 45 minutes, and she's going to answer some questions, and she does a super great job. Okay, here's the gold bears index. You can see the green chart. The green line is the actual gold market, and then you can see the bull bears, which is the candlestick, and it's lagging the market just like we are in the XAU. The XAU is doing exactly the same thing. It's lagging badly. I would think that would be an indication that we'd be expecting, the gold to go down a little bit lower. Now, if we take a look at that XAU very quickly, you'll be able to see here that we're seeing the same type of pattern, but it's actually even weaker than the bull bear index because it's only making a 382 retracement, and it's taken 2 weeks to do it. And that's 2 weeks when the stock market should have been rallying really strongly for the gold and silver miners, and in fact, it didn't do it. So those factors, when you add it up, and the fact that platinum is lagging so very badly, I would think we're going to get a little bit of a correction here. But boy, that silver chart should have a lot of support at 1770 per ounce. Just looking at it from a technical basis, that would equate to around the 1220 level in the market for the gold market, $1,220 per ounce. Okay. Okay, I'll try to remember to do that. This week we're going to have two guests, I hope. We should have our friend Arch Crawford. He's my neighbor also. Should be on this later this week on Thursday, I hope. And then later this week, I hope to have Bill Meridian of Cycles Research in Vienna, Austria. And by the way, people have asked me, who is Bill Sarubi? Bill Sarubi is Bill Meridian. Bill Meridian is his pen name. Bill worked for the one of the big Arab families in Abu Dhabi for many years, and they asked him to use a pen name for his letter because he kept it up all during that time, and that's where it comes from. And Meridian is from astrology. But Bill is from New Jersey, super nice guy. I, and Arch are all the same age, and it's it's really something. Anyway. Al Larson, I know you guys know him. He has a pen name too for the same reason. He uses Hans Hanula, and when he was doing his PhD work on electrical magnetic impulses and computers, he was working at American Telephone doing his letter, and he did the same thing. He referred to him as what's his name? Hans Hanula. By the way, we're not going to do that webinar on the grain markets, and the reason why is both of the guests that I wanted to have, the man from Sylvius Financial, and that is one of the number one crop insurance people in the whole world, Cy Monley and also Rich Anderson. I can't get them together at the same time, so we're going to do it at another time. Possibly, and we'll see, but we'll be looking at. Yes, Al Larson's going to be doing a webinar Thursday at the Denver Trading Group. I hope Tom doesn't get it. I know he won't get upset because he's really big on education, but if you want to hear somebody really smart, Al Larson is going to be on the Denver Trading Group on Thursday, and he's really smart. I've met about 4 or 5 really, really super smart people in my many years here, and Al Larson is right up there at the very, very top, along with the two Arringtons, John and Howard Arrington, and of course Dennis Regan, who I knew many years ago, and then Dr. Jimmy Elder. Anyway, we'll see. Now, Mr. Z, you're going to have to get on this show as a guest of mine. You know, that's what I'm going to do. I'm going to put you on here. John's been around for many, many years as a trader. He knows a lot of the folks that I do, and but he is a real live, walking and talking person, because I've been out to break bread with him a few times, and he is just about as nice as guys you want to meet. So he is a real live guy. He really is. So don't worry about that. People thought that Mr. Z, which is his pen name or his handle in the room here, was something different. But no, that's really all it is. Okay, let's move on to some of these other markets. Wow, the time goes so fast. We're almost at the break already. Hold on one second here, and we'll see what's going on. Yeah, he trades like a robot. He does that pretty good. Anyway, regarding the grain report, there was a couple of really tiny surprises. A little bit higher grain allocated to beans, less in corn, but that'll change because of the price of these things. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the commitment of traders. This is where they report, whether their commercials are, what the net commercials positions are, what the speculative net positions are. And the theory is that the speculator is usually wrong and the commercials are usually right. And I stress this usually because there's sometimes that the specs are very, very right and commercials are very, very wrong. Right now, what this is showing now is that we're showing that the speculators are incredibly long the stock market, whereas the commercials are just the opposite. They're going the opposite way. So that's the main thing that this chart means. I do not use this in my analysis because it's delayed, and I like to use things like patterns that is, forward moving as opposed to things that have happened in the past, because by the time they get this report out, it could easily be changed. But this is what some people use at looking at the overbought and oversold situation in the stock market. But, I just wanted to bring that to your attention. I know Andy Heck does a really great job, and I think Steve Rhodes does it also, but I know Andy handles it very easily because he's been doing this for many, many years. I just have not been a big fan of the commitment of traders because I got bit by it a few times when it said it was so clear, and yet it was so clear, all right, it went the exact opposite of where it was supposed to go. So just keep in mind that this is just another factor that some people use to determine whether we're looking at higher or looking at a overbought or oversold indicator, and that's primarily what it is. As we come into the market this week, we have some really bearish patterns occurring that I think are important to bring out today. If we take a look here at the S&P cash, if you'll notice here, since March 1st, now everybody that has bought anything since the 28th or the 1st of March is now underwater. But what's important is this is a 4-hour chart. So as you can see, we went up and we hit the exact 61% retracement 3 days in a row. The 29th, 30th, and 31st, we did not get a tick above that. And then we closed in the lower part of those bars, which tells us that we have a bias to the downside as we're coming in to this week. Now, if we get above that number in the cash S&P, which would be equivalent to 2370 in the E-mini S&P, then this thing could, have some more of a rally. But right now, it looks like the market is under a great deal of trouble. So another one that looks really interesting from the bearish side, if we put this up, you'll take a look at it. You'll see that the Dow Jones has only been able to rally to a 382 retracement. And that's, the Dow's been the leader. And mainly that's been because of Goldman Sachs and, the Transamerica and Travelers and all these others, because those are the ones that have been, the banking stocks that pushed the thing up. I think the Dow was more than 500 or 600 points just in Goldman Sachs. And now Goldman Sachs is, underwater. You can see that 5-day rally at a 382 retracement is, very, very weak. And if we look at the banking index, you're going to see that same situation. And you have to realize, folks, that when you're looking at this banking index, you're basically looking at Goldman Sachs. That's what you're watching, because the Goldman Sachs is so heavily weighted in the Dow because it's $220 some a share, far higher than anything else. So we'll see what's going on. Someone just mentioned the NASDAQ, and we'll take a quick look at this NASDAQ because it has an interesting pattern. Again, if we look at it on the 4-hour chart, what gives you the 4-hour chart is good because it gives you 6 weeks of what the action is doing. And if you'll take a look at it here, we've completed the big ABCD that occurred, way back on February the 21st. Then we went up to March 16th. We came down on the 22nd. That was right at the spring equinox. And then since that time, we completed the ABCD perfectly on Friday, and we did it with a perfectly symmetrical 3 drive to a top pattern. If you'll notice here, drive 1 is perfectly symmetrical in time to drive 2 and 3, and so that gives it a perfectly symmetrical. This says that we should have a break somewhere of about 100 points in the NASDAQ. And that means it can still be bullish, but right now this pattern is saying it is really ripe for a good correction, much like we're seeing in the DAX, folks. This is what we're watching because the DAX is showing the exact same 3-drive pattern on a 4-hour chart. If we put this up, you'll be able to see. I'll put this up again so you can see it, but this is pretty much the same pattern that we're seeing in the NASDAQ. It's just, the graphics are a little different, but that's exactly the same thing. So we'll see if this is going to be the case. But remember, the Federal Reserve is still in there. Watch that time frame, of course, between 10:30 and 11:30, because that's after the first hour. That's when the Fed will usually come in and do their quantitative easing. I don't know how this is going to end with this quantitative easing, but we'll see what's happening. Now, one other thing I wanted to mention rather quickly, and that is if we look at one of the third largest economy is the Nikkei, and I wanted to bring this up to show you. This is a daily chart on the Nikkei, so you can look at it, and you're going to be looking at a very, very negative pattern. As you can see, we headed down. We were about unchanged today. There's of course a holiday in China, and the Hang Seng is open. It was also basically up to just very slightly, but many of these have foreign ETFs and foreign stock markets. They never got above either the 61% retracement like we did into the Shanghai or 78% retracement in the Nikkei. So these were far weaker. Remember, we went to a 1.618 expansion on our NASDAQ as opposed to making just a 78% retracement in the Japanese market, the Nikkei Dow. So these were totally different markets. We were the benefactor of the election results from the bullish side, and then we'll see what moves on the next few months and what goes on. Folks, someone's asked me a question over the weekend is, do I feel that we've made a major top in the stock market? It is really too early to tell. The two reasonings behind this is, one, is we've not seen anything that would scare anyone as far as being able to say, for instance, that it would really be a really big thing, that we were going to be really strong and stuff like that. So this, we have to wait and see if this is going to be over a longer period of time. But right now, we're having the problem that I see from the bearish, from the bullish side is we have very good news, and yet the market does not reflect it. I mean, we start the day really strong, and then we end the day weak after news. And when the market doesn't respond to good news, that's usually a bad sign. So we'll take a break here. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back, and I wanted to continue on with the theme of looking at some of these markets, the stock market, of course. But the Dow Jones is by far the weakest of the 3 indices because we've only been able to rally to a 382 retracement of that. Whether that's going to continue or not, we'll have to wait and see. Someone's asked a question about the gold. Folks, we really need gold to get moving to the upside. And we went up here. We still haven't been any higher than we were a month ago. That's when, we were trading around the 1265 level. We went all the way down to 1195 and then back up to 1260 again. And the way it's looking now is just when you look at the stocks of the gold, the XAU, and you look at the price of platinum, and it just looks like it doesn't want that it just doesn't want to have the impetus to get out here. Now, this could change in a matter of a minute, of course, but if we do get above that 1265 level, that's going to be a pretty bullish sign, I would think. But, right now, I still think we've got a chance to see 1220 on the gold and 1770 in the silver. Those would be ideal things to look at. Now, the silver chart looks it's hard to believe, but silver hasn't had a down day since Hector was a pup. I think it's up like 13 days in a row, which in itself is a very unusual thing. I think, it closed lower one day. That was on Thursday, and of course it reversed it on Friday. But we had the perfect ABCD pattern topping at the 1865 level. We came all the way down to 1685, and then all the way back to 1830 again. And we still haven't been able to pop through that. But as you can see, if we get above that level, it's going to be clear sailing. Now, the ideal situation to do that would be to see the market move down to the level of, what would it be? So it'd have to get above, silver would have to get above the, if it gets below the 1770 level, that would be bearish in silver. But if it gets above 1860, that would be very bullish. That would be a pretty strong breakout. Even after 13 days in a row, tells you that someone really wants to own silver. And as you know, we've liked silver here at TFNN since for a very, very long time. Let's take a quick look here because there's a stock here that deserves our attention today. Just pull it up and take a look at it. This chart is from our good friend Jim Bartolione. This goes back a very long way, back into 2000. Actually 1999. And as you can see here, this is a monthly Amazon chart, and it shows the measured moves that we've had over a monthly basis. You can see here that's a perfect ABCD pattern. That's a 3 drive to a top pattern. that should enter here at around the 892 level. So watch 892 in Amazon today. That's going to be very interesting. But if you look at the bottom part of this, you'll notice that we've had some divergence here in the RSI. And also, you'll notice that the volume has been very, very slow. But that's indicative of almost all the stocks because of the high-frequency trading, and that is it. So someone just mentioned that we just hit 892.21 in the Amazon. Now it's trading at 891. Whoa! Who says this stuff doesn't work? That's a little early, folks. One thing I did do is during the break, I pulled up the chart of the DAX index. Let's just get this up here so you can see it. This is just a 15-minute chart on the DAX showing that big pattern that we had at that 12,003 something, whatever it was. And you can see we gapped up and now we're back down into the gap area. So far that pattern has started to work, but it's still a bit early to look at this. So that's part of the reasoning for the volume, folks, is the fact that there's been so many of these stocks that have merged and been bought out, and mergers and acquisitions and stuff, that the volume is just related to some of that. And we don't have many IPOs coming out like we used to. Why that is, I don't know. So we'll see. We'll see what happens down the future with that. But we really don't. We're running at about, I think, 30% lower than the usual volume that we see, which is highly unusual, considering we've had this tremendous bull move of 24%, since the election, and that's been really something. So we'll see, what happens with some of these other things that we're watching here this morning. One other question about that commitment of traders. I probably shouldn't have put that up, but I had several questions about it. There are people that follow it very, very closely. I am not one of them because by the time the report comes out, it's 30 days late, and that's a little too late for my taste. So I just stick with the patterns. That tells me whether there's buyers or sellers, and that's pretty much what we're looking at. Let's switch our gear here and take a look at the Treasury notes, because I think we've got enough data here now that tells us we should get ready to start looking at higher rates again. As you can see, the T-notes, we came down in March when we had the Federal Reserve come in. We've been rallying now for just about a month. We went up to the exact 78% retracement last week, and so that would be the resistance area that I would be expecting. That number in the 30-year Treasury bond comes in at 152.06, which is the bonds have been weaker as they have been all along. So that tells us that we're watching what's going to be looking on. And you're right, Mr. P, because if it gets down to that lower level in the bonds, it would be a good buying opportunity. That would be down around the 150 level, which is what we're looking at, what we're going to be seeing. Okay, so we'll take a look at this and see what happens to some of these, and then we'll take a look at the German Bund here, because this is also one that has been following along with the Fibonacci numbers very nicely. Now, this is the equivalent to the 30-year bond as it trades in Germany, folks. So you don't need to trade the German bond, but it has a lot of the same, well, it has the exact same characteristics as our 30-year bond. So it trades the same way. It's a very huge market, not as big as our T-bond market, because our market, the T-notes, is by far the biggest market, followed by bonds and volatility and stuff, and those are the ones that look the most interesting here as we get along here. Looking along here, let's take a quick look at what the market's doing. We're not even up on the day. We're just basically unchanged. Watch the bonds here, folks. If we get up in this 5120 area, that would be a really good spot to say this might be where you would be looking at a potential for a reversal back to the downside. In other words, higher interest rates, lower bond prices. So keep that in mind. I thought I answered this question again. Folks, the gold has been in a very, very tight range here for the last several days. We need it to break out above the 1258 level on the upside, or take out the 1240 level on the downside, and then you'd have a pretty good setup either way. We've had two $17 corrections in the gold just very, very recently, And so what you want to do is to make sure that it doesn't get any crazier on either direction. In other words, it's got to get above those levels, 1258 in the gold and on the upside, and 1242 on the downside, 1240 on the downside. Then you could probably see, more of $11 or $12 reaction. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We've got a few minutes to go. One of the things we want to do is to remind you that some of the key things that we're watching today is the fact that we did hit the 892 in Amazon. That doesn't mean it can't go to 992, but that completes the third perfectly symmetrical drive to a top going over a monthly basis over the last 7.5 years. So keep in mind that's a very important thing, because that's a big thing on the NASDAQ. We made a higher high in the NASDAQ than we did on Friday by 2 points, folks. It didn't go much up above that so far, but it's still very early in the day. The second thing that looks very important today is the fact, is the fact that we hit the exact 78% level in the euro. at the 106.50 level. We're only trading at 106.63 now, so there's been very little of a bounce from that level. My opinion is if we get below that 106.30 level, that the euro has made that higher ABCD top on the daily charts that we talked about that would send it down, close to that 104.50 again. And if we get below that, then you're looking at something even more sinister to the downside. So that's the way it looks early this morning. We mentioned the fact that the Dow Jones has been the weakest, and it certainly is proving that today, even as we speak. So watch that, because we only made a 38% retracement over 5 days in the Dow Jones. You have to look at it on a 4-hour chart, but you can see that the market was very weak, and most of that was related, not most of it, but a lot of it was related to the banking stocks that could also only rally to the 382 retracement. So that sets up what we think is a bearish divergence. Now, it's not always that way, but this is the way it looks, so far this morning. As far as the gold, there should be some resistance up here at the 1253.5 level. That's the 61% retracement of the range that we had over the past couple of days, and on the downside at 1240. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.